Hi, Steve Holden here from Copley Fund Research. Just a quick video on country level positioning amongst active emerging market managers as we enter Q3 of 2024. So I wanted to split the video into three parts. We're going to look at the big four countries of China, India, Taiwan and South Korea. Then we'll look at the key over and underweight country positions amongst active managers. And then finally we'll look at some of the hot or not markets based on our sentiment analysis. So we'll kick off with our macro dashboard, and this looks at country level positioning amongst 351 actively managed emerging market funds. The total AUM amongst those funds is around about $450 to $500 billion, so a decent sample size. And the chart on the left breaks down our ownership metrics by country. So we can see here China and Hong Kong, average weight of 22.6%, Taiwan 16.8%, India and South Korea. These four really dominating actively managed emerging market funds, and we can see the evolution of that over time. If we highlight all four and look at chart 5 here, we can see that the average weight of these four countries has risen from sub 40% in 2008 to a peak of around 70% in 2020, and then drifted lower, and we're kind of on our way back up again. So 67.4% of the average actively managed EM fund is in these big four countries. Compared to the index, however, if we look at chart 7, the average weight versus the EM, or the iShares Emerging Market ETF, active managers are underweight these four countries by around 8.4%, which is the largest underweight pretty much ever. We're back to level seen in 2016. So if you're investing in a passive instrument, that average weight is more like 76%. And just a quick look at the evolution of the top four. If we move to this chart dashboard here, we can see the evolution of each four country weight since 2008. So we can see China and Hong Kong peaking in 2020. At that point, sentiment took a bit of a turn south with the tech crackdown, etc. And now China weights are actually at the lowest level since 2017. So we're kind of at a 7-year low here in China weights. And that's opposed to India and Taiwan. India in the yellow, Taiwan in the green. We've seen those weights increase, and actually certainly the last 2 years both have seen average weights hit their highest levels at the end of last month actually. So the gap between China and those following two, India and Taiwan, amongst its lowest levels ever. And South Korea, we can see, has stayed in quite a remarkably thin range over the past 14-15 years, between around 10 and 12%, and that's where we remain today, 11.7% of the average emerging market active funds. So we'll switch back to our macro dashboard and let's look at some of the key underweights. So actually India, Taiwan and China and Hong Kong are amongst the three big underweight positions. This is the average active weight minus the iShares Emerging Market ETF weight. And we can see there's four countries that dominate, and Saudi Arabia is the fourth. If we click on Saudi Arabia, we can see how that's evolved over time. Having a look at chart 7 here, that's the point where Saudi entered the index. So active managers pretty much held nothing up until that point and went immediately underweight as Saudi was entered the index, and we've seen that trend lower as Saudi outperformed. But since then we've seen active managers make a concerted effort to reduce that underweight, and that's really best reflected in chart 6. The percentage of funds that are invested in Saudi Arabia has continued to increase, and we're at an all-time high again. Every month we print a new high. So 56.7% of the 351 funds in our analysis now hold Saudi exposure. Obviously that leaves 44% uninvested. So I think Saudi is going to continue to remain a focus for emerging market investors, as it remains a big underweight and it's also fairly underowned, but the trend is certainly positive. If we switch to overweights, we can see it's really dominated by the Americas countries. So Argentina, Mexico, Brazil and the US, the top four overweights. Argentina 1.4% above benchmark, Mexico 1.3%. I think Mexico is interesting given the election. You can see everything was pointing positively in terms of EM active fund ownership in Mexico heading into the election. So more and more funds becoming invested in Mexico. The overweight increased to near record levels, and the percentage of funds who are positioned overweight, so 70% are still positioned overweight Mexico as of the last month's filings. But obviously performance has suffered since that election result. You can see that reflected here, and the average fund weight has dropped quite heavily as markets fell by 10-15%. That's immediately reflected in the average fund weight of Mexico. So it'll be interesting to see how managers react to that, whether they stick with this overweight, and I'm sure there'll be plenty of analysis on individual companies and how they'll be affected. That's certainly one to watch. And if we move to Brazil, we can see that's been a fairly underperforming overweight. So again, similar trend to Mexico, more and more funds invested, more and more funds moving to overweight, but this hasn't really worked. In Q1 and Q2, Brazil was costly to emerging market investors. So again, that's testing the patience, and we'll see how that evolves over time. And then finally, I want to look at what's hot and what's not on a country level, and we can use our sentiment grid to assess that. The y-axis looks at the position score, so how well owned is a country versus its own history. So if average weight, funds invested, funds overweight are towards the top of its range, then the country will remain at this top half. So we look at Saudi Arabia, for example, is quite high up on a positioning level. So we can see most metrics are towards the high. And then the momentum score looks at how the ownership levels have changed over the last 6 months. And so if ownership has been increasing, they'll be on the right hand side. If it's been decreasing, they'll be on the left hand side. So let's pick up Turkey to give a nice example of how the sentiment grid works. So it's in the bottom right of the grid. That's indicative of low positioning. So we can see that positioning used to be much higher in Turkey. Nearly 90% of funds were invested in Turkey at one point. That dropped steeply and bottomed out around about 12 months ago at 32% of funds. So 70% of funds didn't own a thing in Turkey as of April last year. That started to decrease. You can see more and more funds buying into Turkey now. We're at 44.8%, but that's still low historically. And the same goes for average weight. It used to be 3.5%, now 74 bips. We're increasing, but we're still very, very much at a low level compared to its own history. We can look at something like Greece, again on the right-hand side of the board, but positioning is near its maximum ever level. So we can see funds invested at record highs, overweights increasing, everything moving high. So it's certainly a hot market at the moment. Greece, more and more investors starting to take positions in Greece, and it's a similar story for Vietnam as well. So Vietnam trending higher, maximum ever weights, so that's why it's on the top right-hand side of the grid. Finally, let's look at something that's not so well positioned, South Africa. It's really at approaching its lows in terms of investment, certainly in terms of absolute investment. Average weights are pretty much near its all-time low of 2.7%. Even the percentage of funds invested has dropped. So we've got 86% of funds invested in South Africa now. So it's no longer an essential holding. 14% of funds, and that's around 50 funds, own nothing in South Africa anymore. So we're very much at the lowest levels of exposure in South Africa. The underweight has decreased, but that's mainly a function of decreasing average weight. You can't be underweight 3% when your average weight's 2%. So very much just decreasing in line with the average weight decrease. So I think South Africa's one to watch in terms of an under-owned and unloved market at the moment, whether that can turn around and be a focus once more for emerging market investors. But we'll leave it there for now. Please like or share this video if you found it interesting, and better still, follow me on LinkedIn or Copley Fund Research on LinkedIn so you get notified of these videos going forwards. And we're going to try and get one out every week, starting from this week. But until then, thanks for watching and goodbye.